What is up, everyone? And you are watching What's Up, Brian. In today's episode, we're going to be talking about ICOs versus IEOs, or at least what is an IEO and how does it work. Well, it is not the IEO, or at least the concept of IEO is not entirely new. It's just that I think a lot of people are still not very sure how it works. So I decided probably we want to do an episode and explain the key differences, and I guess there are the pros and cons as well on why an IEO is better or why an ICO is better. I think it's always debatable, and let's get into the episode, guys. So in today's episode, I'm gonna be just covering the. Let me just bring you to the screenshot. This drawing. I hope that you guys can hear me because I'm gonna be writing stuff out, and it's always good to have a visual on what is expected of this space, right? So let's just talk about the ICOs first. So if you're new to the channel, welcome. We are focused on, or at least Crypto Grinders, the channel is focused on educating the masses about investing in cryptocurrency and blockchain, right? At the end of the day, investing and trading is part and parcel of one of the many skill sets to make money, and making money is one of the most important things so that you can achieve a certain level of the lifestyle that you want, or maybe financial freedom from your job or whatever it is. So it's always good to be knowledgeable and at least be a savvy investor or experienced or pro trader. But ICOs, let's talk about ICOs first. So ICOs are usually it starts off as you knowing about a particular project, right? And you want to participate in it. When I say participate, you're clearly investing in it, right? These days ICOs are very straightforward. Everyone, when they come into an ICO, it's all about focusing on when and how fast can this particular project get listed, and hopefully there is going to be some genuine activity once it gets listed so that you can obviously sell the tokens, and hopefully there's going to be some long-term growth and value over time. But ICOs usually give people an opportunity to get in early on a project, and usually in the past you would get a decent 2x, 3x, 5x, sometimes even a 10x gain the moment it hits the exchanges. But these days ICOs are really the thing of the past, or at least they are no longer the hot topic anymore. But right now, we need to cover the differences first. So ICOs are from the experience that I've had, right, for being in this space for at least 3 years, is that ICOs are meant to be for everybody. Okay, everybody. So everybody can participate in an ICO. Well, and the thing about ICOs is that there's no third party. So no third party is monitoring. No third party is monitoring how this whole process is being done, right? And that is one issue as well, because although the white papers, sometimes they have the law firms just give the stamp of approval that it is not a security, and that's what the law firms are there for. Okay, they're not there to help you facilitate the transfer of funds. No one is going to monitor whether or not KYC is done or not. And KYC, obviously, it depends on the project, right? So in the past, there was very little KYC, little to no KYC. So what is KYC? KYC is know your customer. Everything was just based on a smart contract where you would deposit to a particular address that links up to a smart contract. And if you had participated, naturally the tokens, when the ICO is complete, will be distributed to your wallet, where you would either connect with either a Mu wallet, MyEther wallet, or a MetaMask. These days, okay, so right now, that is kind of like the process. There is little transparency also. So little transparency. Okay, little transparency and low accountability. Oh wow. So low accountability, yeah. So this is like kind of the current situation, or at least the existing situation, okay? Because when I say low accountability, means that obviously when you are an investor, there are very little agreements that you need to even sign off. It's just a click. There's nothing that needs to be done, and yeah, you're ready to go. It's not complex, right? So in the past, right, I think everyone could enter with, I think, zero point 0.1 ether at a time. It was really, really small. A lot of people can participate. When you talk about zero point 0.1 ether, it would depend on when it occurred, right? So say, for example, if it was at the when Ethereum was $9, for example, Ethereum was $100. I think that will work out to about $10 or something like that. But I think the minimum usually is $100 because it's really very little. Okay, and mostly 10% of the tokens are available for the public. So there would be the seed round, the private placement round, and then after that it will go to the public ICO. And at the time, ICOs were hot because you would do pooling, or at that time there were groups that were doing pooling, and then from then they would consolidate the funds, and then after that approach the company, and because you were able to, if you were the pool master at the time, right, you would be able to get a better discount for your pool. And then when I mean better discount, means that you were able to either get more tokens, right? More tokens, or sorry, you will get a bonus. That means instead of let's say a token was $1, you were able to raise $1 million, for example. You could either get as much as 40% more or 50% more. That would be your potential upside, especially once the token has a high demand on the exchange, especially. And obviously, if it has enough liquidity, everyone gets to get out with a minimum of at least 40% or 50%, depending on what was the bonus. I know there were crazy bonuses at the time that it could be 100% more. That means literally 2x the moment you decide to dump your token. So everyone was doing it at the time, right? And that was the part where everybody was really happy. Like everybody was really excited about being part of an ICO. And to me, the whole idea of an ICO, let's just talk about the bare bones of why an ICO was important. As an entrepreneur, especially when you're starting out on an idea, obviously you want to raise funds, right? And sometimes venture capitalists, or at least when you approach a VC, it's very difficult to raise funds. And and at the same time, it is very expensive to raise funds. Okay, so when it's because the whole process here, there's a lot of legal framework, and you have to usually have the right people and the right professionals to help you out. You probably would require someone who is financially trained, right? Trained in fundraising, and at the same time, you want to probably have someone who already knows the legal framework on how to get this done. And you don't want to be a company that is considered offering a security, therefore obviously having lawyers to vet through your white paper, making sure that you do not fall in that category, because you obviously have to give out something. But there was this gray area where you are trying to say that you're not a security, but then you want to give your investors something in the long run, especially if they decide to hold your token, because everybody you don't really want people to dump your tokens the moment they reach the exchange, but everybody was doing it. Everybody would just, okay, I'm only interested in the bonus. I'm gonna be able to 1.5x. I mean, as long as I get 50% on top, 50% profit, 100% profit from my initial capital, I was happy. And all the small fish were doing the same. So as the space matured, right? As the space matured, there were lock-ins. So if you were a pool, let's say if you came in a pool, or you were an AI, an accredited investor, right? Unfortunately, there were lock-in periods. So these lock-in periods ranged anywhere from 3 months, 6 months. Delayed distribution, for example, were one of the ways. Instead of giving you everything upfront, I would only maybe give you the bonus, but your initial capital will be locked in with us for a certain duration, so that way, right, you will not have an advantage over the public, I guess, because the public usually they are not going to participate much. And of course there were mechanisms in place that kind of forbid you as a public investor to come in with more than maybe 4 Ethereum or something like that. So there were all these little mechanisms that were gradually added on. But nonetheless, at the end of the day, the whole ICO bubble burst, and then a lot of projects, especially if they came in late and decided to do their ICO, no longer could do an ICO because the market started to become smarter. BTC was tanking, and Ethereum obviously was tanking as well. Projects were also getting rid of their Ethereum because as the market was starting to tank, they were not savvy enough to cash out when they raised their money, and so on and so forth. So a lot of all these catalysts happen together to kind of drive the market lower, and obviously ICOs are no longer the favor. But now you have the IEO, which is the let me just so the IEO. Okay, let me just rub a little bit, so I hope that you guys got it. I wish I had better writing though. Okay, so IEO is only for exchange users. So exchange users. Okay, so what's the difference now? So the IEO is basically an initial exchange offering. So I think of late, recently, Binance kind of did that, where Binance I think did the IEO and maybe Fetch AI, and together with BTT, or the BitTorrent token. So as an exchange user, firstly you have to be a qualified exchange user is not difficult, right? You have to, and it's not difficult because I think these days there are quite a number of us who are already on Binance or on Bittrex. Like I use Bittrex and Poloniex at the time. I use Huobi. There are people who use OKX, Lbank, whatever it is. Okay, it really depends. It doesn't matter. The most important thing is that as long as you're an exchange user, you're able to do that. Oh yes, so as I mentioned, another point. So as ICO, you didn't have to do any KYC or verification. You could be a pseudo anonymous person. But as an exchange user, you have to probably validate your account. So what that means is that if you want to participate in an IEO, you definitely have to be verified. So meaning usually it's fully verified, right? Which is a good thing, right? So at least they know where the source of funds is coming from and who is that particular individual using that account. I mean, I'm personally up for that. I think that at the end of the day, there has to be a certain level of transparency. Also, you are leaving the exchange to handle the vetting of the project. Okay, vetting of the project. Okay, right? Because you would assume that, okay, this is the assumption, okay guys? Let's just make certain assumptions. Let's not get too cynical or skeptical at the moment, because like I said, you always want to assume that a credible exchange will at least come up with processes that are meant to facilitate transparency, accountability for both the user and the project, okay? Because the projects also need to protect their self-interest. At the same time, the exchange, or at least the exchange, will vet through the project, making sure that this project is legitimate enough so that you can raise funds through the exchange. Okay, so that's another thing. So it's just facilitating. It doesn't mean that the exchange is liable for the success of the project. Just take note on that. Okay, they are not like your guarantee, your guarantor, or your insurance agent, just in case this project becomes shit or fails in the short term or the long term. Okay, they are just facilitating. So there is, in a way, a third party. So the exchange is your so-called your third party intermediary. So there is a KYC required, obviously. And of course, there is much more transparency, because instead of you, okay, now as an investor, shucks, okay, so you as an investor, right, in the past, what do we have to do? We have to go and do the research. In a sense, we meaning that people who are participating in an ICO, you have to go to the website, you have to check whether this fella, what kind of profile, is the CEO, CTO via LinkedIn, whether they even have a LinkedIn setup. Sometimes they don't, and then after that, you can't find much information. So what an exchange would do is make sure they prep all the necessary collateral, right? At least a write-up or description about the project, what kind of token supply it has, how much will be circulating, what is the distribution, like what is the breakdown, how much of the tokens, the supply of the tokens are going to be dedicated to the team, how much is going to be dedicated for marketing, how much is going to be dedicated to the circulation to the public, how much is going to be provided to the community, as in especially when there's any kind of community incentive, ecosystem or whatever. Okay, so there will be a breakdown. Everything will now be will be listed on the exchange itself, right? So the exchange has to go and do all these things so that it helps to give the investor the ability to make a more well-informed decision, which is of course a good thing, because if I'm an investor and I have to go and hunt around all over the place, right, which you still should do, right, because you cannot leave, you cannot assume that because at the end of the day, the exchange has their own self-interest. Okay, this is a given. Okay, and like I said, this is my personal opinion at the end of the day. But when you're an exchange, theoretically, you shouldn't be the third party. In my opinion, you shouldn't be the third party. But because right now there's no government entity that is willing to do all this, right? And you see, people in this space, they tend to be always a little bit, they're already very cynical of the government, right? The whole reason why the whole blockchain, crypto, decentralization, not having a central party was such a big thing is because people wanted to, maintain a certain level of privacy. People wanted to have the ability to transfer money without the banks, that kind of thing. I am in charge of my money. I'm responsible. But the fact of the matter is that there are a lot of ignorant people. Okay, it's just a given. There are a lot of people who are not savvy, who are not investors, who are not traders. They're just purely jumping in because everyone else is. So someone has to do something. So in this case, the exchanges, that especially if they are here to stay and they're here to build a long-term business, right, a sustainable business, obviously they will probably step it out. So you will have a higher level, I would say better accountability. That would be a better word. Better better accountability. Okay, you all get it. So yeah, so these are the things that immediately can come to mind, especially when you are going to get yourself involved in an initial exchange offering. When you talk about when we discuss all these things, right? Like I said, this whole space is always continuously evolving, and there are certain exchanges that do not want to get involved in this process because you can't do everything. Okay, you're giving a lot of power to the exchange because suddenly the exchange has the say of, okay, they're gonna come up with a few things. One, obviously you're gonna start buying the exchange tokens, so there will be a genuine demand, right? You have an opportunity, or at least a internal ecosystem, a utility token, whether is it on OKX, whether is it on Bittrex, and I don't think Bittrex has their own token. But if you want to facilitate and you don't have your own token, right, I think that makes it a little bit cleaner in that sense, right? What Binance did, right, to me was a little bit, it's a little bit unethical because you had to purchase you had to purchase the Binance token in order to participate in the Tron IEO, okay? And to me, I'm like thinking, why are you restricting it only to the BNB token? Why couldn't people come in with BTC or whatever? I think they could, but I just feel that you don't need to go and get your Binance token involved in it. So that's just my personal thoughts. And you would also want to at least create a certain level of flexibility where people can use other tokens as well. To me, that part was definitely off. It triggered a little bit. Yes, there was a demand, obviously, and everyone who has Binance tokens are happy. And and everyone needs a catalyst. Okay, I think right now the exchanges are taking the lead in creating that catalyst, which I mentioned in a previous episode, that perhaps exchanges are taking the lead, and there's going to be a lot of exclusivity. Especially if you're going to be doing an IEO via the exchange. I don't think there's going to be any okay, I don't think there's going to be a long-term exclusivity role, right? Maybe at least for the initial first 3 months, you cannot go out and solicit other exchanges or try to be listed on other exchanges, because if I'm helping you do all this, right? Firstly, this is a service, so I'm definitely going to be charging you for it. And at the same time, if I'm going to help you, help you in terms of technical support or whatever, right? All these things, right, are fees that the exchange can earn. So it's a good thing. It's a model that works. Okay, it will usually work because any project, especially if you're a young project, you're usually a nobody in the space, right? The only reason why you're somebody is because you had some previous credentials in some other project, right? And then after that, you're now representing it as one of the board of directors, or you're one of the advisors, so on and so forth, and you kind of help that whole network out. So take note, my fellow investors or my fellow traders. Well, traders usually, you're just looking at the volume, but anyway, fellow investors, take note that you want to be very, very mindful that this space is always there's always a veil, right? There's always a veil, and it's very easy to say, sure, as long as I make money, I don't really care. But in actual fact, you have to understand how everything works, okay? And once you bring everything together and you kind of understand how the whole process is being done, right? Then you play it to your advantage. You use all these skills or at least all this information to your advantage, so that you know when to get in and when to get out. And right now, exchange tokens seem to be creating a long-term sustainable value, right? Or they're trying to, at least, right? Apart from whatever internal benefits that you will get for holding the tokens. For example, I think OKX, every Friday they have this Happy Friday bonus where they will distribute a little bit of BTC. This is obviously from the revenue that they generated for the week. So every Friday, so that's probably 52 weeks in a year, you get a little bit of something. If that week's trading was decent, they will give you something. I think it's now a share of revenue. It's very unique, because if you were able to buy, there's no such thing as the NASDAQ. I think you can buy. I think there's a NASDAQ stock, I think, right? See, I haven't touched base in the in that part for quite a while. So the NASDAQ, let's say for example, if you were to buy NASDAQ stocks, okay, and NASDAQ was to issue a quarterly earning or a quarterly dividend, it's every quarter. Now, it seems like, and usually when they give you the earnings report, right, it's based on whatever profit. They will distribute a portion of the profit to the dividend holder, the stockholders, okay? And for crypto, it's very unique because they are giving away either from the profit or either from the revenue, okay? And it's faster. So this space, right, the expectation is like, wow, I get paid either every week or, I get paid every month. At least I get something. And there's another unique thing. By holding exchange tokens, right, or holding certain tokens with a certain partnership involved, suddenly you are able to get some airdrops just by holding the token. So for example, if you are holding maybe the Huopi tokens or Huopi Pool tokens, you're able to get EOS for 1 year, I think, and then you're able to get CyberMouse tokens, you're able to get Tron tokens for 1 year. So there's always that added benefit. And that benefit can always change just by you holding the tokens. And that's very unique because there's no such thing as just because I'm holding the NASDAQ tokens and Apple decided to list on my exchange. Yay, everyone who holds NASDAQ tokens, right, will get Apple shares every quarter or something like that. It's very, very unique, I tell you. The model is very, very unique, very different. Is it right or is it wrong? Actually, there's no such thing as right or wrong at the moment because there's no regulatory body that says can or cannot, But right now, the SEC or whatever financial governing body, right, is only interested in observing this space and making sure that at least exchanges, projects, investors, or whatever, they're all it's not going too crazy. Okay, it's not going crazy. It's there's going to be a certain level of accountability, and I do see that exchanges are stepping up. They're even though they are in Malta or some other Seychelles or some other country that is very open to crypto. At the end of the day, I think everyone wants to build they want to create a reputation in the space. Whether it's a good or bad one, it really depends on the individual. And how I'm looking at it is that exchanges will definitely want to at least create a certain level of transparency, create a strong reputation, and they are here to build a sustainable business. This is very, very important. And for us to move forward as a community and, of course, investors in the space, the more of all these things that we start to see, the more mature we become, especially as an industry. Because if we cannot mature as an industry, right, no money will be willing to come in. Therefore, you're noticing that these days there's going to be custodial services, there's which is also either provided by the exchange or a third party, or at least the exchange will make an effort to create one. And then you're seeing for the fact that they will have like certain requirements, like do you have a legal team already, right? Especially your startup, sometimes you don't even know that you need a legal team, right? You because you're only focused on creating whatever you wanted to create, but then you realize, oh shucks, I need a legal team. Then how much will that cost me? So it will be anywhere from just vetting through the white paper, it can be anywhere from 60,000 to about 80,000 Singapore dollars, right? And then from there, the whole legal framework, including the lawyers, making sure that escrow is all done and all that, at least 6 figures, okay, at least 6 figures. So personally, what I hope to see that exchanges, right, will at least control the funding, maybe to a certain extent. I mean, it's really not what the exchange wants to do, because it gets bogged down, right? And they'll be holding all the funds, which also is also a security risk. If that risk could be handed over to a third party, which is usually a law firm, right, that can create an escrow, it would be better. Or at least you have a smart contract that has the law firm together with the exchange, together with the project, something like that. So the exchange, right, will not run away with the money, especially if you're talking about investors' money here. At the same time, the exchange will not have or misuse the funds, because exchanges can also be guilty of misusing funds, right? Misappropriation. That's also one thing. Then law firms, right? Especially law firms, you want to use credible law firms that are familiar with this space. They know how everything works, and everyone has at least maybe the private keys to this particular amount of funds. I'm just giving a suggestion here. And then from there, or at least how I see potentially that further securities can be enabled. From there, once the project reaches a certain milestone, they will be able to cash out. And how exchanges will function, also there's another thing. As we all know, a lot of projects didn't know how to cash out. So they raised all this money, and then after that, if let's say BTC or Ethereum is highly volatile, they think that, oh, okay, at that time, why everyone was holding? Because if I raise say 5 million or 10 million, and BTC goes up significantly, 2x 3x, I suddenly have 2x 3x, and I only just had to raise like 15 million. But right, 15 million or whatever was the amount raised. But then when the BTC started to tank, right, everyone started to panic. No project, right, because they didn't have the right financial experts or professionals, and neither were they aware of where to sell. Okay, where to sell my Bitcoin, where to sell my Ethereum in bulk, because Coinbase would definitely stop you, especially if they don't know who the heck you are, and you decided to sell 50,000. You eventually will have all these issues. So now the exchanges will facilitate practically everything. I see how this is playing out. I see how this will be played out. If we facilitate and we create the wallet for you, and then we will do everything for you. What we'll do is we'll help you to liquidate a certain, not liquidate, we'll help you to cash out the amount that you raise. I see all these things happening. Okay, and there will be probably internal arrangements and all that. And I just hope that, of course, the exchanges will be transparent to a certain extent. I don't expect exchanges to be very, very transparent, okay? But it would be good to list out, okay, what happens, once the money is raised, what happens? Will there be a progressive payout for the exchanges? Between the parties and to the project, okay? What happens to my money then, okay? When will I receive my tokens? All these things, right, I expect the exchange to list down for me. And obviously, sometimes people don't know how to ask the right questions because they are not experienced enough. They've never participated in all these kind of things before. So obviously, they will not ask questions. They'll be like, okay, as long as I get my tokens, I'm happy. Very, very normal, right? And what I hope to see is that there's going to be more descriptions, more coverage on the projects before you even do the ICO. Because what I hated the most during the ICO period was that, I caught wind of this project, okay, and it's gonna be big. And I'm like, okay, how do you even hear about the project? Because this particular marketing company was sharing it in our forum and whatever. If the IEO is gonna be conducted, I hope that the IEO will be conducted and having at least a 6 months period. That means everything is firm, Everything is firm from the time that the marketing starts. Okay, to the fundraising portion, wherever is it private placement or whatever, right? Everything is stipulated clearly, and by this period, if you were not able to raise, there will be a penalty. Stuff like that. There has to be all these kind of things. Or by this period, this project should be listed. That kind of thing. There has to be a firm timeline, and not like, right now we are doing our IEO, and then after that it can go on for 1 or 2 years. So then I as the investor, right, will be thinking, that's my liquidity there, right? That everything is locked up, and there was no communication. And like I said, a lot of investors will not think on this level. When you go into a private placement or an IPO, right, there's an expectation of when it should be listed. Okay, that's just the thing. If this is going to be listed 1 year later, 2 years later, it has to be stipulated there. And make sure that you say if you say that is going to happen, right? If you say that is going to happen, stick to it. Okay, and not like pretend and delay. That was just purely annoying, okay? And at the time, obviously everyone was it's very unfair, because you think about it, right? People put in their money, they had this expectation that there will be a listing, but in the end they never got the listing. Some projects, right, until now, they accept the money, but they never distribute the tokens, until now, okay? And I don't want to name shame or whatever, because like I said, these projects, it was at the previous time. There was no rules, there was no regulations, there was nothing involved. But right now, I hope that the exchanges, if they're really going to start doing this, right, they are going to have a very high level of transparency and, of course, the framework in place. So I'm going to be pitting all the exchanges against each other, and then as the IEO space, if it even takes off, right, starts to mature, right, I will do a breakdown. I'll do a breakdown and then let you guys know my personal thoughts on which ones are going to be good, and the pros and cons. Like I said, every exchange now, right, especially if you're a top exchange, you're going to be drawing in more and more volume. See, this is how the game is being played, because I'm going to draw all the volume. I'm going to have built my user base. At the same time, people who see that I'm having a solid exchange, right, are going to start trading other stuff, because the speculative mind will start to kick in. The greed starts to kick in. So apart from that, even if you just came in on the IEO and you've never traded before, suddenly, because I have to register on an exchange, I'm like, wow, shucks, ding ding ding, it's like a casino already. Everything you start wondering, wow. And then after you see this particular token pump, and it's 30-40% today, I'm like, whoa, shit, people get exposed. They get exposed to the new world, this new world that they never knew before, right? And like I said, you as a user, it's always best to get it's always good to get educated, and that's why CG Protégé is there, right? We have our Udemy courses that are free, and then we have the advanced one that obviously is a paid one, and then we have the CG Protégé group that we have a free option, and then we have the paid option as well. We have a masterclass coming up at the end of the month, which is going to run for 2 weekends. Stay tuned for that. We're going to be launching that. You're going to start seeing you're going to see ads that are going to be blasted on YouTube and so on and so forth. You're going to see that. So if you're someone who is really truly interested in this space, you really want to learn from the professionals and people who have been in this space, and we understand how this space works, we're going to reveal all that in the masterclass. And at the same time, obviously, the Protégé group has been running for already a year. I mean, we have a private group that has been running for already 2 years, ever since 2017. Yeah, so we definitely we definitely want to help educate the space, guys, because if you don't get yourself educated and you start throwing your money randomly at all these things, I guarantee you're just gonna lose money. I guarantee it. And if you made money, you're just lucky. But the next time you're gonna throw in more, and then you're not gonna be so lucky. All right. So that's the whole idea. Don't try to get lucky. Get informed. All right, guys. So that's all for the episode. If you felt that this episode was helpful, please give it a like. And last but not least, don't forget to share, especially if this space is starting to heat up. You want to make sure that your friends and family are well informed, and you don't want them to be participating in a random IEO, right? The next thing also, please subscribe to the channel and click on the subscription bell so that you never miss another episode. See you guys.